big banks got slapped with nearly $6 billion in fines. They settled with U.S. and U.K. regulators over allegations that they had rigged the currency markets. Citigroup, Barclays, J.P. Morgan Chase, and Royal Bank of Scotland pleaded guilty to conspiring to manipulate foreign exchange rates. Authorities said they used coded language in an electronic chat room to try to move the prices of euros and U.S. dollars. U.S. Attorney General Loretta Lynch.
They acted as partners rather than competitors in an effort to push the exchange rate in directions favorable to their banks, but detrimental to many others.
UBS and Bank of America received immunity in that antitrust case. Instead, UBS pleaded guilty to rigging the interest rate benchmark known as LIBOR. It paid the Federal Reserve more than $500 million in fines, but that was less than expected, so its shares rose. And Bank of America also paid the Fed $205 million to resolve the central bank's currency fraud.
Remind us of what this spoofing investigation is, Jesse.
Yeah, so, spoofing is this practice that regulators and prosecutors have really been concerned about in recent years, where traders are basically tricking other market participants into moving asset prices in their preferred direction. You do that by flooding the market with a number of fake orders and then immediately canceling them. As we all know, in the era of lightning-fast computerized trading, these transactions happen so quickly and other computers respond to those orders. So the goal is to put out a bunch of orders, get markets to move in your direction, then cancel the orders and profit, and post gun brain. Regulators have cracked down on this practice. This would be a record settlement involving spoofing, I would add.
So is it isolated to JP Morgan? We know that there were question marks over the precious metals desk for some time. But again, this is a record fine. I think the previous record was just more than half of this. So you wonder if this is going to be the end of it, not just for JP Morgan, but for any other bank out there that may or may not have been engaged in these type of activities.
Well, one thing we've learned covering these sorts of investigations that I would always be hesitant to say that I don't know, that I know for sure that there isn't worse conduct out there, because every time you get a record settlement, it seems like within a couple of years you get a new record. And we also know that it's rarely the case that misconduct was isolated to one bank. Usually you need other conspirators at other firms to pull off a lot of these tactics. Not saying that that's what was going on at JP Morgan. We don't have those details, but that's certainly been the case in past settlements with this kind of conduct.
The nation's largest bank is being hit with a record fine. J.P. Morgan Chase has to pay $920 million as part of an agreement with financial regulators and the Department of Justice. The fine settles charges relating to a group of traders at the company who manipulated the market for precious metals and U.S. Treasuries over an 8-year period.
J.P. Morgan metals traders have been charged with alleged market manipulation. Wilfred, you've been digging into this story all day.
Yeah, so 2 current and 1 former J.P. Morgan precious metals traders have each been charged with alleged spoofing, market manipulation and fraud between 2008 and 2016. Spoofing involves placing orders with the intention to cancel them before they can be executed in order to benefit other existing trades. Okay. Michael Novak is a managing director and heads the global precious metals trading division, while Greg Smith is an executive director. Both were put on leave by the firm. Christopher Jordan is a former executive director. Novak's attorney said today it's truly regrettable that the DOJ decided to go forward with the prosecution of Mike Novak, who has done nothing wrong. We look forward to representing him at trial and expect him to be fully exonerated. The Justice Department is conducting multiple criminal investigations into big banks with the cooperation of traders who have pleaded guilty to spoofing-related crimes. In June, Bank of America Merrill Lynch settled with the DOJ and CFTC for a combined $36.5 million. As part of the terms, the firm admitted it was at fault for 2 former traders who allegedly manipulated the precious metals market. JP Morgan has not settled, nor pleaded guilty, nor made any specific comment, but there have also been no charges made against the bank itself. The share price not really reacting, unsurprisingly, in relation to this, Sarah. We watch now for further developments.
I was just going to say, in the context of scandals and issues, how big of a deal is this?
The bank's not been charged specifically, though there are more traders involved for them than have been for Bank of America, who ultimately then pleaded.
Global financial institution JP Morgan Chase is set to pay nearly $1 billion penalty to resolve market manipulation investigations into some metal futures. It is being done by U.S. authorities into trading of treasury securities as well. The large fine would lift a regulatory shadow that has hung over the bank for several years now and mark a signature victory for government's efforts to clamp down on illegal trading techniques. These techniques are spoofing, especially in precious metals. JP Morgan has said in public filings that it was in discussions with authorities about resolving the investigations. In settlement with the Department of Justice, Securities and Exchange Commission SEC and Commodities Future Trading as well. It said it could come as soon as this week and is expected to result in not big restrictions. JP Morgan shares, they fell about 1.6% yesterday, less than declines by other major banks. Spoofing is a practice in which traders place orders they intend to cancel to move prices in order to benefit their market positions. The Justice Department has taken aim at practice in recent years, using sophisticated data analysis tools to spot potential wrongdoing that it could not previously detect. The agency began using techniques in 2007. It originally developed to spot healthcare fraud schemes to identify suspicious trading patterns, including by scanning activity on exchanges as well. The agency has already charged 6 JP Morgan traders for manipulating metal futures between 2008 and 2016.
The banks admitted to spoofing. So let's start off by explaining what this practice is.
Yeah, so spoofing is kind of typically kind of flooding derivatives markets with orders that traders actually don't intend to execute in order to kind of trick other market participants to kind of move the price in a certain direction that they want them to. Think of it like trying to sell a hamburger by flooding the front of your restaurant with a bunch of people, and as soon as someone buys it, everybody disappears.
So what were the losses from all of this then?
So the losses in the marketplace, the government says is $300 million to other market participants over 8 years.
Right, so part of the settlement, Tom, means that the bank needs to continue to cooperate with ongoing investigations. So does that mean there's more to come? And, what sort of scale are we talking about here?
Yeah, sure. Yes. So we kind of got a little window into sort of how big a case this might be about a year ago when they brought racketeering charges against about 4 JP Morgan precious metals traders. And sort of today, we'll get a real sort of look at just actually how extensive the government's case was, because it not only involved this precious metals desk, but also their treasuries desk. And as you said, it's, we now have 15 traders accused of this misconduct over a significant period of time. And so there's cases continuing against the individuals at the moment.
So how did the U.S. government figure out this was going on from the get-go?
Yeah, sure. Really, they, for the first time, they're really using data, their own sort of data from the traders to make the case. So anytime these traders are putting in an order, they use their personal ID on the exchange that they're trading on. And what the government did was they got their hands on all that trading data and kind of looked for, the red flags, and kind of came up with a list of traders to look at. And from there, they started, issuing subpoenas and knocking on the doors of traders' homes.
Tell me, will there be compensation for the victims?
Yeah, so this $300 million, the Justice Department is part of their resolution is collecting that from the bank. They're going to set it aside in some sort of crime victims fund. So, at some point, I guess they'll try and provide some type of notification to market participants that they could probably file something in an attempt to, be compensated.